Well, Melinda, welcome back. You are the first repeat guest that we have had on the Propagate Fintech show here, so really appreciate you being back.
Glad to be here.
This is a really interesting article that you wrote, and I think if people are not, really looking at this as potential for a major change, they may be making a mistake because this feels like a big deal with MrBeast coming in.
It definitely could be. A lot of people are taking a wait and see approach as to how effective it actually is, especially with it being such a new type of move in the fintech industry.
Wait a second.
But
Bankers are saying let's wait and see. That's not
I know.
bankers. Yeah, that's all right. We've all kind of been
We love
trained to be
them.
like that over time. Yeah. Well, why don't you tell me a little bit about like the people that you spoke with when you wrote this article?
The main people that I actually talked with for the story, mostly because I wasn't able to get a hold of anyone at Step or at Beast Industries in the immediate days following,
Sure.
was digital banking analysts. So I talked with Dylan Lerner at Javelin Strategy and Research. I talked with Theodora Lau, who's been in the fintech space for a while and has founded a couple of her own companies. So it was people who have been in the fintech and digital banking sphere for a while, but more on the independent analyst or consultant side that I was able to
Okay.
interview for the deeper dive on the piece.
MrBeast wasn't available.
Nope, unfortunately not.
He's only 27 years old.
Yeah, he's only a few years older than I am.
Unbelievable.
Just wild.
Yeah, no, that's crazy. So I guess, when you first saw the news about MrBeast stepping into fintech, what made you think, okay, this is totally newsworthy?
Well, the first thing was the size of the media empire that Jimmy Donaldson, who is known by his YouTube handle, MrBeast, has built, especially post-COVID. He really started taking off probably around 2017 to 2020 or so, but over the course of the pandemic became a household name between the Beast Games and his different philanthropy projects and just being now the single largest channel on YouTube with, I believe it's now 467 million subscribers.
Mhm.
Anytime MrBeast does anything, it's newsworthy with that kind of reach and that kind of influence. So it intersecting with my beat, which is fintech and digital banking, made that newsworthy automatically. But the other element is it signaled a intersection between the creator economy, which has big dollars behind it, and the tech-driven financial services, which is looking for those big dollars and has a lot of potential to grow in the very near future.
Yeah, very fair. And I think this is one of the first times where we are seeing a a bridge of trust stood up between the creator economy and financial services. And I can't really think of a better personality than MrBeast to do this.
For sure. I know that especially with the years that he spent crafting his brand and developing this trust among the viewer base to the point where Theodora Lau mentioned in the article that I wrote for American Banker, I think she actually mentioned this in our interview, but I didn't include it in the story. I wasn't able to find a good way to do it, that there were calls for him to run for president if the age requirement for the position was reduced. So
Wow.
he has a lot of influence and a lot of people really believe in what he does and what he stands for. Not to me to say that he isn't a YouTuber without controversy, but what is a YouTuber without controversy these days? That's part of how they built their
Yeah,
brand.
sure.
So that's
Sure.
another element of what defines someone who has that trust. Because it used to
Right.
be you had to have a spotless record, but that's not the case anymore for creators or for institutions.
or for politicians.
Yep.
And that
So
that's
that's not a
that's a whole other
requirement anymore.
conversation.
But
Yeah.
point being, a spotless record is no longer a requirement. So that
Yeah.
opens up the field a little bit more.
Yeah, exactly. And if you when you look at the kind of the genesis of his success, I want to say it came from giving money away.
That was a big element of it. Yes, Beast philanthropy is a big portion of his brand. He attributes his success in the early days to religiously studying the YouTube algorithm and tailoring every single one of his videos to perform as well as possible, no matter what it was. And then taking all of the proceeds and all of the money raised from those videos and immediately turning it back around to make bigger and better videos. So whether
Hmm.
that was increasing the production quality, whether that was investing in equipment, whether that was literally just taking wads of cash and giving them away, or creating the now famous, infamous, decide what term you would like to use, Beast Games off of Squid Games. So that cycle that has been created of earning money, using that money to make bigger videos, those videos make more money, use those to make even bigger videos, is a ecosystem that he has built from the ground up for upwards of a decade now.
Are we entering a phase, you think, where distribution power may matter more than product innovation in fintech?
Not sure yet. On the one hand, distribution power is a huge factor. If you have a product and you can't get it to the people who want it, it's hard to make money off of that product. But I don't know that it will be more important than product innovation, because distribution requires a good product to sell in the first place. So, product innovation in the chicken and egg scenario is still a critical element of the process, and I don't see it being superseded by distribution, because wide distribution on a poor quality product can crash and burn way worse than a great product that just doesn't have super strong distribution, because the few people who do have it will still be pretty satisfied with it.
That's fair. I think that makes sense.
Yeah.
So, do you think Gen Z is more likely to trust a personality or a creator brand over a traditional financial institution?
It depends on whether you're talking about older Gen Z or younger Gen Z. So, because of the gap that Generation Z fills, is just like from the late 90s to the early 2010s, I'd say older Gen Z probably ends up more in the millennial camp. So, the institutional skepticism around being old enough to remember the 2008 financial crisis and seeing how it impacted families and communities, even if they didn't fully understand why or how it was happening. But that younger Gen Z, which is more probably the high school, college age students now, wouldn't remember that, but would remember the pandemic in 2020 and how financial institutions either stepped up or didn't over that time. Not to mention the huge creator economy that exploded over the pandemic, and people with not much else on their hands except time to spend on the internet following influencers and creators, spending hours and hours of time building that trust is definitely a stronger point of conversation with, I would argue, younger Gen Z and even into Gen Alpha. The oldest Gen Alpha students are in high school right now. And that's the demographic that the fintech that was acquired by MrBeast, Step, that's their targeted age bracket, 13
Mm-hmm.
to 18. That's the overlap between Gen Z and Gen Alpha. And so that is as much a part of the conversation as it is Gen Z as a whole, which ends up somewhat in the millennial conversation, somewhat in their own camp, and somewhat overlapping into Gen Alpha and their connection to the creator economy in the context of how online we all were during the pandemic.
That makes sense. And my daughter's 13 and she loves Mr. Beast, loves the Beast games. I mean, yeah, I feel like, I don't know, but actually, I'm going to ask her when she comes home from school today, like, hey, if Mr. Beast is opening up a bank, would you like to have a bank account there? Or do you want a bank where me and your mom bank? And I'm sure she's going to say, oh, the Mr. Beast bank account is. But if I were to ask her why, I bet you there wouldn't really be a huge I'm sure he's a trustworthy place for depository products. I mean, it's going to be just that she
The
is a fan.
conversation at all. Yeah. It's
Yeah.
very much just who do I relate with? Who do I identify with? Who are the immediate associations? Every politician knows the power of name association. You may not happen to know all of my policies, but if you know my name and see my name on the ballot, that's as powerful as anything else.
Yeah. So before was doing Propagate, I worked in a partnership capacity at a fintech, and so I was out there looking for partnerships and ways to kind of enrich our distribution model. And I feel like this is a whole new dimension. Obviously, if this crashes and burns, I think this movement will kind of scale backward a little bit. But if it's successful, it's going to introduce a whole new paradigm for enterprising financial institutions to kind of ride this wave, if you will. What do you think this signals about the future of creator led financial products?
The thing with creator investment when it comes to fintech is that celebrities investing in fintech has been around for a while. And even with the fintech that was acquired, Step Financial, it had investment from TikTok creators back when it was first founded and in 2020, 2021, 2022. So the idea of the overlap between celebrities and creators and fintechs has existed, but mostly from an investment standpoint. The acquisition element, that's what's new. So time will tell, like you mentioned, how that actually works out, especially because we don't know yet how involved MrBeast is going to be, if it's
Mhm.
just going to become a part of the overall media portfolio of Beast Industries, which has extended from everything from philanthropy, like you mentioned before, to retail products, to TV shows, to food products, even, where even if there's a piece of the pie in a bunch of different areas, that doesn't necessarily signal a heavy amount of involvement from the creator directly. For one thing, his YouTube channel is keeping him busy. But we do know that MrBeast has been interested in entering financial services for a while. One of the things I mentioned in the American Banker article is that Beast Industries received a $200 million investment from a digital assets company just a month before the Step acquisition. So to be determined on how that's going to look. But since financial services is something that MrBeast has expressly mentioned he wants to be involved in and wants to invest in and wants to work with, the level of involvement may determine how that moves in the future as far as other fintechs and other creators and being able to find that niche. I wasn't able to include this in the American Banker article, but he
Yeah.
said in some way, shape, or form that he wants to give millions of young people the financial foundation he never had. He said that he never learned about investing or building credit or managing money when he was growing up and
Mm.
wants to be able to give that opportunity to the young people who follow him on his platform. And Step is perfectly in line with that goal,
Yeah.
with it targeting
Right.
students 13 to 18, giving the opportunity for high schoolers to build credit before they turn 18, even giving them opportunities for crypto investment. I mentioned in my article that Step launched a crypto product in 2022. So there's a lot of different elements of financial literacy and financial education that MrBeast has mentioned interest in being involved with, but instead of building from scratch, he bought someone who was doing it already.
It's so interesting. Do you think, following along the note of banking as a service, a lot of banks are totally happy being invisible behind the scenes and, the blue vines of the world, right? They provide the front end experience, but they get to use another charter. Do you think that this expands on that idea and we may be seeing more banks being happy just kind of being the rails, if you will?
A really interesting question for two reasons. One, banking as a service has already had a big moment in the fintech world that became a little bit of a crash and burn in 2023 because of the Synapse shutdown.
Yeah.
And not only that, but the partner bank that was in the middle of that whole situation is the partner bank behind Step, Evolve Bank and Trust. So that introduces a really interesting element as far as the banks that are behind the scenes of these fintech acquisitions and just fintech operations in general. I was talking with Dylan Lerner, the Javelin analyst that I talked with for the American Banker story, and he told me that this could be an opportunity for Evolve Bank to redeem itself a little bit in the banking as a service area. He doesn't anticipate that Step and Evolve would change their relationship anytime soon as a result of the acquisition, just because that sort of thing never happens overnight. But it could go in one of a couple different directions. One being Evolve learned its lessons from the Synapse incident and is really able to step up to the plate in bringing the regulatory compliance requirements that the acquisition would need in order to be successful. Or because of the additional regulatory scrutiny that any partnership that Evolve Bank and Trust would be involved in because of everything that happened with the Synapse and Banking as a Service meltdown a couple of years ago, that it could be in case of being asked more than it can fulfill. And we just won't know yet, depending on one, if the relationship between Step and Evolve stays the same as it is now, or if it changes in the future, if it evolves to, for example, Step going with another bank as its banking as a service, or if it stays on, it would be more on the digital assets side with a potential future digital assets direction that Beast Industries will take it in, or if it stays in the digital banking side as it is now. There's a lot of unknowns in that area,
Mhm.
but as far as banks staying under the radar behind the scenes, providing the rails while not necessarily having the branding, on the one hand, yes. On the other hand, I don't think the partner bank can become completely invisible, specifically because of all of the attention that banking as a service received when it went terribly wrong a couple of years ago. And that's still
Sure,
fresh in the memory of
sure.
many bankers and many regulators. So it'll be
Yeah,
interesting to see how that goes for this case in particular.
yeah, absolutely. And I mean, if you're in an executive leadership position at Evolve, you cannot say no to this opportunity.
Oh,
You
for
just
sure.
Yeah, I mean, if I was in an executive leadership capacity there, I mean, I feel like you have to be willing to break some glass and get scrappy with how you stand up and meet the opportunity because it's so significant. I'm curious, why do you think that they chose Evolve? Or I guess Evolve was already plugged in with Step.
Evolve was already plugged in with Step long before the
Yeah,
acquisition.
okay.
So
That
it would
makes
just
sense.
be a maintenance of the status quo to continue that relationship at this point. It was never mentioned in the deal if there would be any changes to the partnership. If there is, that wouldn't occur right away. So Evolve will be involved in, at minimum, the first elements of the integration and acquisition process and as the deal closes and all of that. So there's definitely a role they have to play. I just don't know if it'll be short term or long term.
Yeah, it'll be interesting to see if that marriage sticks it out because something tells me Step has got a little more leverage in the relationship now.
Yes, time will tell how that all turns out.
So, Melinda, do you think that this could change how fintech founders think about go-to-market strategy, especially around building an audience and a community, versus just being able to work with, let's say, somebody like MKHD or Linus Tech Tips or, Doug DeMuro with, the car guy?
Definitely. I know of a couple of fintechs that have done this already, separate from the Step acquisition. I'm specifically thinking of SoFi partnering with a creator called Your Rich BFF, who has been creating content for SoFi and for their channels that is very Gen Z targeted and financial literacy targeted, investing advice and the like. And SoFi has put a portion of their audience building and community building investment into tapping the existing community that this creator has built around investing advice for Gen Z and for younger consumers and for those who are financially curious about learning the secrets of the trade, if you will. And SoFi's tapping into that through a partnership with a financial creator. So definitely examples of that as far as go to market and audience building. There's definitely still a strong potential for the native audience building. Chime has been very much focusing on the more native, them as a brand going to you and offering what they have versus partnering with a built-in audience elsewhere. But there's definitely room for both, especially in the very tech-driven, online, digital-first world that is fintech startups.
Yeah. I think that makes sense. I mean, I feel like if you are trying to grow your brand, you're trying to grow your business, you should absolutely be looking for a content creator to partner with who has a huge audience that you can just bolt right onto, and you immediately get so much more exposure and impressions and, you know, what
Yeah.
have you.
The main thing there is making sure that the goals and audience of the content creator are aligned with you as a business, because
Oh,
consumers
yeah.
and subscribers can smell an insincere ad or sponsored content from 10 miles away. So whoever it is that a business partners with, it needs to be like they genuinely believe in the brand, they genuinely believe in the company, and they in bringing this to their audience, especially with the idea of being an influencer, those who take that seriously are putting their personal brand with your company. And that's a big ask for a lot of people. So making sure that that alignment is solid is very much the key to that being successful. Otherwise, it could either just peter out and not really have a lot of turnover, or it could cause harm to both the influencer's brand and your personal brand. Um, there's a lot of different ways that could go really well. There's a lot of different ways that that couldn't. So being aware of consumer sentiment around sponsored content and sentiments around creators, this is where it could actually get really sticky for a business or a fintech. This is where the risk element is, because with the prevalence of cancel culture and the prevalence of how quickly public opinion can turn on somebody
Right.
for like a tweet surface from 15 years ago, it could take hours for public sentiment on an influencer to completely unpredictably turn on a dime. So ideally, you would filter the content creators you work with very thoroughly to reduce that risk. But at the same time, the opinions of the mob could change on a whim. So there's an element of risk to pursuing content creator partnerships for that exact reason. And you can think
Yeah.
of probably some examples of that very thing.
Yeah, yeah, no, absolutely. And it's probably really unsettling for a lot of bank leaders who really like to understand the universe of possibilities. And when you have a content creator who's walking around with meta glasses, recording live, or talking to the general public on Venice Beach, or whatever it may be, you're along for the ride. So you got to really make sure that you are partnered up with the right people. I don't know, maybe that you could actually get away with it. Maybe there's a level of separation there for a financial brand because they're not that content creator.
Yeah, that very much depends on the approach that the company decides to take. Some have the contingencies and can be ready to drop a contract at a moment's notice if something goes south. Others may decide that the best way to keep their audience is to stand by their contract, where there might be a wider wave of negative sentiment that disappears after a week, but the core audience is going to stick by no matter what. Those conversations and those strategies are much more a discussion around people who are familiar with the content creator industry and how those waves can affect business than it is probably a bank strategy conversation, just because those aren't the same things at all.
Right. No, I think that makes sense. Gosh, and I think a lot of financial services brands, even if they were approached by a A-list celebrity, I don't think a lot of them would really know how, maybe the A-list celebrity is like, hey, I want equity in your company, and I'll start doing commercials for you guys, or, whatever type of
Pretty
ads.
common. Like I mentioned, investing in fintechs is something celebrities have been doing for a while. Even there was a stunt where ASAP Rocky became the CEO of Klarna for a day. It was promoting sustainable fashion, I believe. But that sort of
Nice.
thing has been around for a while.
Yeah.
So there
Yeah.
are people who know how to navigate these kinds of partnerships and these kind of investor relationships. It's finding them and being able to navigate the differences in culture among the influencer and creator and celebrity economy versus the financial services and bank institutions economy. Being able to find those interpreters and those translators that can help cross those divides is a very, very valuable thing to have as fintechs are looking ahead to the future of potential creator collaborations and partnerships in the future.
Yeah, it takes a real talented eye, I think, to spot that, and really great operators to stand it up, get the ad out there, to kind of know when they need to just say yes and go with it, and when they need to pull back a little. But, one thing that you mentioned around these celebrity endorsements is that, they're all fintechs, but they're not banks. And so
Yes,
it'll be
very different.
very different, very different. And so, I've seen some content creator marriages between, let's say, like, community institutions where, let's say, mom in a small town in Arkansas has a brand around going to the children's museum and going to restaurants and child friendly this and that and yada yada yada, and there's a brand partnership there. But it's super, super different to having someone like MrBeast, or, some other content creator associated with your brand.
For sure. Even with the Super Bowl advertisements, where I remember reading multiple stories and posts on LinkedIn and on social media of people buying hyper local or hyper regional Super Bowl commercial ad spots for community banks and for credit unions, knowing they wouldn't have the same kind of reach as a national ad, but also knowing they would be able to get eyes on their institution from people in that zip code and in that community in a way they wouldn't be able to otherwise. So the national conversation and the local conversation, even with the exact same thing, a Super Bowl ad, is going to look really different.
Yeah. No, absolutely. Absolutely. Let me ask you one more question here. What do you think fintech operators and bank leaders should be watching really closely right now as this unfolds, and where should they be watching the happenings?
Of course. When it comes to the Beast Industries step acquisition, there are three things that I see should be what bank leaders and fintech founders pay attention to as everything settles out. The first one is regulatory compliance. It could either work really well or really not well, especially with some of the players involved. As I mentioned before, it could be Evolve Bank's opportunity to shine, or it could crash and burn all over again. The second thing is how digital assets are incorporated, because we know that digital assets are a element of Beast Industries' future strategy. We know this from statements by MrBeast. We know this from the Bitmine investment, a crypto product that Step already has. And we know that digital assets are going to be a big topic of conversation for banks and fintechs over the next year or so. Seeing how the next steps are played out in digital assets for Step and for Beast Industries will be a big thing to keep an eye on, how that's incorporated, how that's all connected, how it's brought together, what that investment looks like. The third thing is consumer response. There is a huge potential for consumer growth, but we need to see whether that potential translates into reality. MrBeast has now 467 million YouTube subscribers. How many of those will become Step customers? It could be a few thousand, it could be a few million. Even a small percentage when you're working with a potential consumer base that big is still a lot of people. But being able to bring in an audience from one space into customers of another is always challenging. So, how that challenge is approached and how successful it is will definitely be something to keep an eye on. As you mentioned, it is as much a distribution story as it is a fintech one, especially depending on how involved MrBeast and Beast Industries are in running it, or if Step just continues to do its own thing. But consumer response, especially among the target audience of about 13 to 18-year-olds, so late Gen Z, early Gen Alpha, that will be the main thing to watch. And that could take upwards of 1 to 2 years to really see how well that translates over. But definitely worth keeping an eye on.
Yeah, I kind of want to go try and open up an account with Step. I know they might say, "Sorry, Unc, you're out of here."
Maybe you
That's
can
some Gen
convince your
Z slang for you.
you convince your 13-year-old to try it out and report back. Have her send
Yeah, yeah,
screenshots.
yeah. Oh my gosh, you know what? That's a great idea. I'm actually going to do that. I'm going to do that when she gets back from school today. Well, you know what's crazy is that if they only got a few percent of his followers to sign up for Step, that would immediately make Step a major regional player.
Absolutely. As of the acquisition, or at least the most recent number Step reported, they had 7 million users. 1% of MrBeast's 467 million subscribers is still a massive portion of Step's consumer base from what it is now to what it could be. So the potential for scaling the business is massive.
Well, Melinda, thank you so much for coming on the show again. Where can people follow the work that you're doing?
The easiest places to follow my work are the American Banker website. That's the publication I write for. So following my author page, my colleagues also have a lot of great work on the different topics we've covered in today's session. I also will often post my stories to LinkedIn and network with people who I talk with in my stories there. So those are the two easiest places, is the American Banker website and my author page, and LinkedIn as far as my main social media for sharing stories.
Okay, awesome. Well, Melinda, thank you. And I look forward to having you on the show again.
Thank you so much for having me, and this was a really fun conversation. I expect to see a MrBeast debit card in your daughter's hand in the future.
Probably. Hey, thanks for being here. If you or someone else you know would like to explore coming on the show, fill out a contact form at propagatefintech.com, and we can explore some content ideas with you. Also, we are an end-to-end marketing and PR firm only supporting the bank industry. So if you would like to explore going deeper with Propagate, again, feel free to reach out to us and we can explore whatever that you are working on. See you on the next one.